So how often do mortgage rates move before the Fed actually takes action? All the time. So it's more important to follow what the signal is. The signal can come from the Fed or from economic reports, and really it's a combination of both. And then ultimately, that is what affects our 30-year mortgage rates. So it all comes down into movements of money. Our long-term interest rates are a factor of movements of money. So investors are always deciding, do I want to put my money into mortgage-backed securities, or do I want to put my money into similar assets? And the most similar investment opportunity that somebody would have, other than a mortgage-backed security, would be a 10-year treasury. And what the market has shown is over time, what we see is that there's about a 1.7% premium that an investor will require to be able to put money in mortgage-backed securities versus 10-year treasuries. So the premium is about 2.3%. So bonds are at about a 4.4% yield. Our interest rates are at about a 6.3% mortgage. That spread of 2.3% is the premium that investors are saying, I need that for it to be a good deal for me to invest in mortgage-backed securities versus putting it into bonds. What we all, as rental property investors, should be really rooting for is that people want to buy 10-year treasuries. Because if there's a lot of demand for 10-year treasuries, then the yield of 10-year treasuries comes down. And then our interest rate for our 30-year mortgages comes down by a similar margin. So inflation is ultimately what is driving those yields of the 10-year treasury. And we've seen weakness in the labor market. And so what that has signaled to everybody, including the Fed, is that we are going to see lower inflation numbers. Because if there's higher unemployment, that would lead to potentially lower inflation numbers. And so us as an economy and those who manage money thinking that lower inflation may be happening because of the weakness in the job market is leading people to say, if we see inflation becoming less of a concern, well, then the yield on 10-year treasuries is probably going to go down. So what does this mean for us? This is great news to see our 30-year mortgage rates come down. You should start to think about more mortgage application coming, more home sales coming, and then more home price appreciation coming.
Oh!